Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is the Kickstart video. Today's date, December 11, 2024. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. All right, let's look at the euro versus US dollar from an hourly perspective. The last 3 days have, actually 4 days after peaking on Friday here after the US jobs report, but the high in trading on Monday came into this swing area up through here where we had a number of different swing highs and swing lows coming into this area here, forming a nice little ceiling actually right through here. And the high price that we saw on trading on Monday did reach into that level just barely and rotated to the downside. In trading yesterday, we tried to hold the 100-hour moving average right through here and bounce higher, but they couldn't really extend above the 38.2% retracement of this move to the downside, giving the sellers the go ahead to push lower, and indeed they did into yesterday's New York afternoon. We came back up toward the moving averages here. This is the 100 bar moving average on the 4-hour chart. This is a 200-hour moving average in trading of both at the close yesterday and into the Asian session here today. Found resistance against a 200-hour moving average that forced the price back to the downside, using that 100-bar moving average as resistance here, and it's way lower. Now, there are other different levels here that we target as long as the price can remain below these moving averages right here. If the price can remain below these moving averages, the bias remains lower with this swing area down through here acting as the next support level. That area comes between 1.0448 and 1.0461. If we get to and through that level, it opens the door toward 1.0424 level. And then other lower levels, including the November low price, which came in at 1.0332 on the downside. Conversely, if we move back above these moving averages and the bias shifts back to the upside in what is more or less up or down trading here over the last 10 or so trading days. So don't forget that, but right now the bias is more to the downside for the euro versus US dollar below those moving averages. So be aware, be prepared. Let's take a look at the dollar versus yen next. Let's look at the 100-hour moving average on the dollar versus yen. And what we can see in trading here yesterday was that the high price came right up to the 100-bar moving average on the 4-hour chart. We also moved above the 200-day moving average. That's this green line right here, back here. The market held resistance against that level before moving to the downside. So getting above the 200-day moving average was important, but the 100-bar moving average got in the way, and the price into the close fell back below the 200-day moving average. And that gave the sellers the go-ahead to push to the downside. Now, admittedly, I was looking for support down here, which was a key level through here and here, forming a floor. And then we moved below, tried to stay below, but couldn't. Then moved above it and then fell below it again here and returned to it here. And trading this week, we came up toward that level and trade above and below before moving to the upside. But we did fall below that level before bouncing quickly to the upside. And that bounce up more to the upside took the price back above the 38.2% retracement, back above the 100-bar moving average and the 200-day moving average here. And that opened up the door for the next targets up here, including the 50% midpoint of this move to the downside from the November high to the December low. That level comes in at 152.69, and the 200-bar moving average on the 4-hour chart just above that level at 152.79, and that's where the market stalled. So something about the 100-bar moving average on the 4-hour chart here, something about the 200-bar moving average on the 4-hour chart here, and we are in between those levels now. So trading here today, what's the decision tree for traders? Well, we could see sellers against the 200-day moving average. Why? Or 200-bar moving average. Why? Because risk can be defined and limited against that level. If they're right, then the price could see a rotation back down toward the 200-day moving average and 100-bar moving average on the 4-hour chart. I would expect willing buyers against this level because it was resistance here, broke above it, and now it becomes support. And both those moving averages are key moving averages. And like up here, traders can define their risk and limit their risk against that level. As long as the price remains above it, we could see a rotation back to the upside. If it moves below, get out, because it's telling you something. It's telling you about the momentum of the sellers to the downside. So be aware of those two levels. But right now, the battle is on between 200-bar moving average, 100-bar moving average, 200-day moving average. That's the battle. Let's finally take a look at the sterling versus US dollar. And looking at this currency pair, the last three or four trading days has seen the price move above the 200 bar moving average on the 4-hour chart. We did it on Friday, we did it on Monday, and we did it in trading here today. And as you can see, each of the breaks above that moving average, this is biggest, this was big, and this is just a little, just a few little pips above that level before rotating to the downside again. So there is some reluctance against the 200 bar moving average on the 4-hour chart. That move to the downside took the price back below the 100-hour moving average. That's this blue line right here. And we moved down toward the 200-hour moving average. That's this green line right here. Also near this level is the swing area that I've had outlined on this chart for quite a while. It's a level where we've had either support or resistance against this level. More recently, we found support against the area right through here, here, and here, where it formed this floor. And in trading here today, the floor held, and we've seen the rotation back to the upside where the price moved back toward the 100-hour moving average, toward this swing level, which includes this high right here. So there is a battle in this currency pair as well, with support at the 200 and 200-hour moving average and swing area, and resistance against the 100-hour moving average and swing area right here. If it moves above, we're going to need to get, if we're going higher, we need to get and stay above the 200 bar moving average on the 4-hour chart, 50% retracement, in which case we'll look toward the 200-day moving average. If we move below this level, we look back down toward the 100 bar moving average on the 4-hour chart. So there you have it, a look at three of the major currency pairs. Kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.